Hello, I'm Edward Park and welcome to Brooks MacDonald Weekly Market Commentary. We'll start off taking a look at what happened in markets last week, then we'll look at our theme of the week, which is the sell-off in Japanese government bonds, and finally we'll see what's happening in markets over the coming 5 days. So starting off with the MSCI UK, that was up 0.19% over the course of the week. In terms of sectors that did well, information technology led the pack, and that was up 1.9%. And in terms of those in negative territory, telecommunications, an old favourite of those, was down 1.7%, as was utilities, both of those being a bit more yield and bond sensitive. We also saw real estate also in that pack, off 2.3%. In terms of the US market, it was broadly flat, up only 2 basis points, and the European market did relatively well, up 0.52%. So looking now at our theme of the week, we're looking at the sudden sell-off in Japanese government bonds that we saw at the tail end of last week and the start of this week. Now this is about an unconfirmed report that came out suggesting that the Japanese government, or the Bank of Japan more specifically, was willing to let the 10-year bond rise slightly. So that might be in two formats. It will either be in terms of forward guidance, or it could actually be they hike their target rate. So at the moment they say they're targeting a rate of around 0% for the 10-year bond. If that was raised, obviously without the bank supporting it, it would also rise in the market as well. So the bank actually, to stem the flows, and you can see this very sudden move up on the right-hand side of the chart, the bank to stem this has actually said that they will buy an unlimited number of bonds at 0.11% to put a bit of a cap on the market sell-off. Now no one's confirmed this yet, but what we have seen is a strengthening of the yen. So this is people who are pricing in a bit of monetary tightening coming from Japan, and possibly the start of a bit more of a trend. Now, one of the things that has helped the Japanese market for some time is the fact that when there is yen weakness, that is positive for the Nikkei and for broader Japanese indices. So when we've seen a bit of yen strength here, this actually should be actually quite negative for Japanese earnings and therefore the stock market. So it's definitely one to watch here. This very sudden change are based on unconfirmed reports, we should stress, but it's all coming ahead of next week's Japan policy meeting, so Bank of Japan policy meeting, so we might get further information there. So in terms of data for the week ahead, not much coming out on Monday, but on Tuesday we have the PMI data coming out of Europe and out of the US, so major bellwether figures for the economy there. On Thursday we have consumer confidence in Germany, as well as the initial jobless claims coming out of the US as well. But Friday is a major data point of the week, and that's the advanced reading of Q2 GDP for the US. Now that's going to be quite a bumper number, and that's expected to be 4.3% on an annualized basis. Now that should be said that the prior reading, as we've got on the screen here, was only 2%, so there's a bit of catch-up from the slightly slower Q1 is being expected. In terms of politics and central banks, one of the major events of the week is on Wednesday, when Jean-Claude Juncker and also the EU trade chief are meeting with Donald Trump to discuss what they can do to alleviate the risk of US tariffs on European car imports. So again, this is the ongoing question mark in terms of trade war. Been a bit of talk of escalation over the weekend as well, in terms of the US putting tariffs on $500 billion of Chinese exports. That basically means it would be the entirety of the imports, but we'll see whether that actually pans out in practice. On Thursday we have the ECB meeting after last month's announcement of the tapering of QE, or the actual ending of QE by the end of the year. Nothing major is expected there. Recent statements from the ECB suggest that the market took last month's statement slightly more dovishly than the ECB was expecting, so there might be something there around rate rises at the tail end of next year, or maybe moving that forward a bit. The market's not expecting that, but it does seem to be that the ECB is slightly concerned that the market has taken its previous announcements quite so dovishly. We also see on Thursday the WTO meeting. They're having a general council meeting, and that's to discuss the ongoing concerns over US-China trade. Finally, in terms of earnings, we have 175 S&P 500 companies reporting. That includes some of the tech heavyweights. We've got Alphabet, a la Google, and we've got Amazon and also Intel. It's interesting to note that we've had 86 S&P 500 companies reporting so far, and 81 of those have beat earnings expectations. So it's all set for quite a strong Q2 earnings season so far. Thank you very much for watching, and if you have any questions, please contact us via the website.